Let's take a look at the volumes we saw yesterday. $101 million worth of trade, really low volumes. The second day where we've seen volumes sitting at these levels. Why has the market been so low?
Well, yesterday there was a bit of caution. We are seeing investors sort of trying to digest the news of the 400 basis points increase in the base lending rate, in the central bank rate. Essentially, higher interest rates would push investors away from the equity market and into debt. And so we are seeing a lot of disconnect now, especially with regards to the buyers and sellers. So we could see the market trending low, and that's why we're seeing very thin volumes.
Right, Safaricom, one of the outperformers yesterday, that being the second largest stock on the exchange, rallying by 1.7% to 3 shillings 5 cents. Now, we've got news out that it's retained its market dominant position, sitting at with a market share of 69%, adding 148,000 customers between June and April. Clearly, the company continues to benefit from, the economies of scale that it has, as well as the product innovation that it's introduced in the recent years.
Yeah, certainly. And in fact, last week they raised their tariffs on voice across the board at least 30%. Today we've seen Airtel coming up and saying that they're going to maintain their tariffs, and that would make Safaricom at least 60% more expensive on the voice tariffs. But I think if you're looking at what they've been doing, especially in the network, they've been trying to be very innovative, especially on the data side. So if you have a mobile handset, you just don't want to call alone, and we've seen minutes of use going up, but you also want a very good internet connection. If you look at the competitors, they've lagged in terms of launching their 3G network. At least now Telkom Kenya, the only other major competitor for Safaricom now, has launched its 3G network in August. And we saw, its number of subscribers generally to June. I mean, the impact of the 3G network has not been felt yet, but we expect Telkom Kenya to probably be the more dominant player going forward in competition with Safaricom.
Now, we saw Telkom's market share steadily growing, sitting at 10.7% at June this year. That's from 8.5% in December, also adding around 600,000 subscribers. So as you say, really starting to eat into the market share of bigger players.
Yeah, certainly. And just from the investments they've done, and they have very good infrastructure now going forward, I think they'll probably be the ones to really watch, to really cause like major competition for Safaricom. Airtel and you have not been investing that much. They've lagged behind on the data side. The mobile money transfer systems cannot compete with Safaricom just on the basis of economies of scale and just availability across the country. So we've seen subscribers being less cautious, or especially with the very low tariffs across the board. They're not very incentivized to remain with one telco per se, just for one service.
How saturated is the voice space? Because Bob Collymore of Safaricom says whilst we have prices on their end rising, the voice space is not dead. Yeah,
certainly. I think in terms of growth, we are probably topping up. But in terms of the absolute number, if you're looking at it in terms of overall share of revenues, it's still going to be very important to the telcos. So that's the part of the business that you want to manage very, very carefully. But in terms of growth, we're probably looking at data as well as financial services in the case of Safaricom. But obviously now you have the capital expenditure coming through, and with a depreciated shilling, it means it's more expensive to give away equipment for free. It becomes more difficult generally to service the data segment. But I think that's the segment that actually has opportunity going forward.
Where the growth will be. Let's shift our attention to the banking sector. Kenya Commercial Bank now entering the Tanzanian mortgage market, signing a 3 billion shilling deal with the leading Tanzanian mortgage finance and National Housing Corporation. How lucrative is this market for KCB?
I think they've chose the right partner in that market. I mean, KCB has been in Tanzania for, I think, around 10 years now, and they know the market very well. And opting to partner with the National Housing Corporation is obviously a very big plus for them.
What type of growth is there in the mortgage space, particularly where they've had a lot of changes with regards to property ownership in Tanzania?
Yeah, certainly. Quite a lot of changes you've mentioned there in terms of the registry, in terms of the sectional titles. Those are now getting streamlined, and that provides a lot of opportunity in terms of how quick you can offer mortgages, and just in terms of the law penetration. It's going to increase quite significantly going forward. And Tanzania in the East African community has presented quite a lot of opportunities in terms of GDP growth. It's the second largest economy in East Africa. So it provides a lot of upside after Kenya. I mean, Kenya, we've seen its own turbulence and there's been a lot of competition. So Tanzania really comes in a very close second, and I think KCB has made the right move in that market.
Very quickly, you've got a sell rating on East African Bureaus at 162 shillings. Why have you initiated this new recommendation? It's the biggest listed stock on the exchange, and the company has been doing particularly well in the East African region.
Yeah, we think fundamentally the business is very good, and there isn't restructuring. So Serengeti getting into Tanzania, as well as buying back the 20% stake held in that Submiller has in the 20% in the subsidiary KBL. We think all that is very positive, but I think in the overall scope of things, it's just generally overvalued.
What is a value that you would say is more reflective of the underlying value of the company?
We now have a fair value of around 138, which sort of includes the dividend of a dividend yield of about 5 to 6%.